Now, Ukraine, of course, just one part of what is really kind of a three-headed Hydra that is impacting your money with inflation and the Fed's rate hike and balance sheet plans also in the background. Let's try to tie it all together and bring in Aaron Gibbs, Chief Investment Officer at Main Street Asset Management. Aaron, it's good to have you back on. I got to imagine your clients are nervous. What are you telling them? How are you sort of comforting them in what is, in very many ways, monetarily, militarily, globally, a scary time?
It is, and certainly we have a lot of clients that feel it. We try to put it in perspective of looking at just how extreme the market fear is, and it's not necessarily a time to make any big changes or moves if you don't have specific cash needs. And one of the examples we use is looking at the VIX. Anytime the VIX is over 30, it's in that extreme fear period. And generally, those are not times that you want to make big changes or really, cash out of the market. Certainly, we do have clients that just need to get out in order to sleep, and so we accommodate those. But for the most part, we try to tell them this looks to be, again, another very quick and volatile period where we can see changes quite rapidly. And since February 14th, the VIX really started breaking above 30. We've had 4 days in a row where it's above 30. That's a little long in the tooth. That's sort of a rather extended period of being in extreme fear. And so we'd like to say that we're eventually going to come to an end, though we still see a lot of nervousness, and obviously the headlines are going to keep people up. But markets don't tend to stay in that range for that long of a period.
This isn't like 20, even 15 years ago, Aaron, where if you wanted to sell a lot of stock, you called somebody, they could sort of talk you down off that ledge. Now you just go onto your computer, your phone, your tablet, and you hit sell. It's very easy to be reactionary in this type of environment. How do we pull back and have people sort of see the bigger picture? If you loved stocks 3 months ago, they're much lower now, unless it's oil and gas, of course, but yet you hate stocks now. I mean, how do we add some rationality to what is unfortunately an increasingly irrational world?
Right. And so, looking at just how much selling is going on, looking at valuations. Ultimately, we haven't seen really significant changes in earnings perspectives for the year. Yes, even if oil is more expensive, that does not bring the entire U.S. economy down. Certainly, we had inflation worries, but we're still looking very healthy when it comes to profit growth. And we also look at we look at what the Treasury yield is doing, and we see that the 10-year has actually been dropping quite significantly since mid-February, which is saying that there has been a lot of risk off, a lot of panic, selling out of equities, buying into bonds, pushing those yields down, even when we're expecting to see higher inflation. And so we use that as an example of, do you really want to be part of this, selling at the bottom, panic selling, buying into bonds, getting those, pushing the prices higher, or do we want to just wait it out? Just take a month, take a breather.
What's the answer, Aaron? What is the answer to that?
We try to say, take a breath, take a breather, and take 1 month. I think we're going to see a lot of uncertainty removed from the market after the Fed meeting. And so we're saying at least wait until March 14th when we see those Fed hikes. We're going to have a lot more certainty about what's going to be ahead for the year. And so just put it on pause and maybe turn off the TV.